All right, good morning traders. Welcome to the Bookmap All Markets webinar. This is Bruce at Bookmap. We'll be going through live order flow analysis for any markets that you want to take a look at that we can connect to. The whole goal of the webinar is to understand the order flow, understand the participants in the auction process, and the way that they participate is via orders. It is the only way they can participate. That's why order flow can offer an edge, and that's what we're here for. All right, so the onboarding webinar tomorrow, 8:30. If you are new to Bookmap and you want to are struggling to get up and running or have questions, please come to the webinar. I'll put the link here into the chat for you. It is at, like I said, 8:30 tomorrow morning. We'll get you connected to data and then connect it in Bookmap and add symbols and answer your questions. All right, and let's see. The supply and demand setups course, we've been going over this again and again, and we'll be showing it in the webinar. The way that you can access these here, let me show you. Just go to bookmap.com and then click on education here. That'll take you to the hub here, the Bookmap Learning Center. There are hundreds of free videos and live events every day. Go here. Here's the course. Click on that, and you'll see there's 10 setups in here based off of supply and demand, real supply and demand, not just support and resistance. There's a distinction. It's in the course. All right. Our desk is over, so we'll come up with and let you know about the winners on that. And then the process in here, what we're going through, just for you Academy members out there, just note there is no Bookmap Academy this week. Again, it's holiday. You know, 4th of July, markets are actually closed on Thursday at 12:15 or 1:15 East Coast time. Okay, 12:15 Central. All right. So you can look it up in the CME calendar there. So enjoy your holiday. Friday is off. Markets are closed. 4th of July here, Independence Day here in the United States. Anyway, this is our process that we go through for the Academy as well as in this webinar. Looking for what's moving the market with the impetus. Then we look at our key levels, our higher time frame key levels, and then we're developing strategies and scenarios that are going to be around parts 1 and 2 here. You know, looking at what might happen around these areas. DNT is the expert here on that, developing these strategies. Then, as you can see, number 4 is the setup here. It's number 4 on the list. It is the last thing on the list. That's how important it is. It's the last thing. These are much more important to understand what's moving the market, your key levels, and developing strategies. Because if you don't do this, you won't have the proper setup. You'll be trading the wrong setup. And then you're going to be misaligned, and you're going to think, well, my setup's not working. And it's just not true. Your setup, if you've studied it, if you have back tested it, it should work. I mean, there's times when it works not as well or whatever, but it should work for you. When you get to number 4 in your setup, it's down to execution, simple execution. You know the checklist, you know what your setup looks like, and then you can grade it. You can determine how much you want to risk on it, your sizing. And then you're looking for order flow events to execute and manage your trade. It's as simple as that. Okay. Anyway, let's move on. General disclosure: all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. All right, let's jump in. Well, welcome everybody. Let's check out over here on Discord. Good morning everybody. Dan, Aloise, Trading is Life, Snowman, and Shark. All right, So anyway, we just had some data here at 10 a.m. Okay, so you can see the volatility there, back and forth, and note the order flow around this event. Okay, this is why we go through this process that I just outlined earlier. Note, I mean, it's just fascinating to me. It just never ceases to fascinate me. Look at, see this line here in the order flow. See that? Does everyone see that? Okay, right in here. See that distinction? Okay, so here at 10:59 and some change, maybe 10 seconds or so, a lot of orders were pulled from the market. Okay, and see how it got dark in this area in here. See how it's kind of dark in there? See how it remained kind of dark in here for a while, right? That's because of the order flow. And there's less orders than previously over here. You can see in the heat map. And that's it. This is the condition of this event. It's an important event. Okay, this was the manufacturing PMI and also jobs, Jolt jobs openings. Okay, at the same time. Okay, and yeah, they were kind of a little bit better expected for the jobs, Jolt's jobs, and also for the ISM manufacturing PMI, which is important. So we're talking about inflation and strength of the economy, etc. And this leads into jobs, and that's going to lead into, and it parlays directly into the non-farm, which is going to be on Thursday, okay, at 8:30 a.m. And note again that the markets will close early on Thursday at 1:15 East Coast time or 12:15 Central. All right. So anyway, guys, just going through this order flow and how important it is to understand. Look at this in here. See this high liquidity right here. Everyone see that, right? You see this one down here as well. Look where the market went. It went right to that liquidity. Here's the volatility here. If we zoom in a little bit, immediately hit the bid hard, goes right down into that high liquidity in here, completely absorbed all of that selling pressure here, completely absorbed. Look at CVD drop like a rock here, and look where it stopped. Okay, limit orders. This is the market mechanics. It's in our market mechanics course. Limit orders can stop the market from going lower. In this case, limit buy orders can, and in this case they did. We don't see one tick below. Okay, not one tick, not one transaction, not even the best bid went down there, and then it went back and forth in here. Everyone's trying to figure out what's going on with the data. You can see the big spread in here in the S&P, and all sorts of things going on in here, right? In a about a second and a half or so of activity, and then price comes right back up and trades into high liquidity here, and it's not totally absorbed. So actually there's still more buying pressure. It was able to go a bit higher. Okay, look where it went, and it just went shy of trading here, and we know this is just fact. You know, right here at 62.48 and a half, it did not trade there. We see 13 contracts, I'm sorry, we see 7 contracts that trade right below it, and that's it. Okay, talk about getting stuck at the tip of the auction here. The last trader in that auction during that time period. Those poor 7 traders buying there, and then look at the back and forth in here. Okay, so look what happened in terms of price action. Let's zoom out to current market. Okay, we're still within all of this price action from the event. That's how important events are. And that's why we went through that whole plan, right? That's why we have this top-down approach in our plan. Let me go back to it. Okay, I'm sorry, guys. It really is worth you know, bearing and repeating this in here. Impetus, what's moving the market, key levels, scenarios and strategies, and then finally your setup. Okay, so this is what's happened so far. we don't know what's moving the market right now. We don't know the condition of traders in here. We know that this was an important event, and that's about all we know from that right now. Okay, because all of this price action is still within the initial back and forth from the event. Okay, now look what's happening now, though. It's getting kind of interesting, right? In fact, God, I almost want to throw some orders at this in here. It's probably going to be a little late, but let's see if we can. And I'm going to send it into, because I want to demo it, our multi-account product in here. There we go. There it is. And let's set it. We're all set up. Okay. And yep. Got 1, 2, and 4 orders. Good. Okay. So I'm looking for these buyers now to trade right, and I just getting that all set up and just missing it. I'm looking for a test up to here. That's it for right now. Okay. But look at it's already tested it. Okay. And it's trying to break it now. Okay, those 7 poor souls or 7 orders that were up there are now in profit. Okay, and we're seeing the momentum. Okay, so now we just traded up into high liquidity here at the figure 62.50. All right, so and then let's see if we get follow through in there. After trading into high liquidity, a few different areas in here, we look for a pullback. Okay, and we're getting it. Okay, or it's just going sideways right now. Okay, this is typical. This is what we typically look for in terms of the order flow. All right, and here we go. So now we're getting a more of a pullback here. All right. Okay, so understanding these market mechanics in here, you could have just and you saw this momentum picking up by the buy side in here. You could look for trading it up to here, and then maybe hold it for more because you do have some momentum. Trades the figure here. You can dump it off. You can even short and trade it back down here for another 1.5 in here. Okay, and it's not about the scalping that I really want to cover in here. I'm just saying that taking a look at that and understanding these market mechanics opens up the market for you in this way. Okay, that this is how the market works. All right, looking for that pullback after this was what we anticipated. Okay, now we rotated back and forth in here, and then all of a sudden we found some buyers here. Okay, so now people are buying. Okay, now can they buy more? Can we get up to 62.52? It looks pretty good. Okay, there they go. Let's see if we can get this one more push here up into 62.52. Okay, now we're getting a lot of liquidity getting filled in here though. So how much more buying is there? We need to determine that. There they go. Okay, so now that has traded. Okay, there's even higher liquidity up here at 55. Anyway, you guys understand where I'm going with all of this, just understanding. Good morning, Laura. Just understanding this dynamic between in the order flow here between the passive limit sell orders and these aggressive market buy orders. Okay? This is supply and demand. All right. In fact, one thing that we would be looking for in a trending market like this is now starting to trend is we look for low volume pullbacks. That's this setup in here from our learning center in here in the supply and demand setups course. It is right here. Low volume pullback. It's a great setup in that trending environment. Okay, what we're looking for is precisely something like this here. See the buy volume in here. See the dots in here. Look how the price action's climbing in here. Trades into high liquidity, pullback. Look at the volume in here. Okay. This is just more like profit taking, or maybe there's some selling in here, but it's a lot lower than compared to all of that buying. Okay, and we rotate back around again, and we find more buyers in here. So your entry on a low volume pullback would be someplace like maybe here or maybe back in here when you start to see buyers come back in after the retest here. Okay, there's all sorts of nuances to take a look at even on this small example in here. Okay, and that's this liquidity in here. See how this liquidity came in, how we trade into it here. We see some transactions take place right there, and then that's it. We start to rotate back up and we find some buyers in here. Okay, and then looking for that trend continuation. Okay, for all of you volume profile traders out there or market profile traders out there, okay, this is that price exploration on that low volume pullback. Okay, you can even look at it here in terms of your profile. Okay, here's the let's go in here. Okay, here's your profile. Okay, in this chart range in here. This is your low volume node here and here, right? There's another one down here. Okay, but we'd look for the first pullback into the low volume node, and that might be it. Okay, I think it went down to this one. Let's take a look. So at 48.50, yeah. So you would have gotten filled at 48.50 for sure because it went below it. If you had a limit buy in here, you would have been filled. Low volume pullback, and then look for top of the range again, and then look for the break into the next level of high liquidity, just like that. All right. Off to a good start this morning. So let me see if there's any questions. No. Okay. Nothing on YouTube. And how about here over on Discord? No, nothing at the moment. Good morning, guys. Good morning, CMJ. Danish Musk, new. You've been in here a few times, I think, now. Shark, Snowman, Steven, trading his life. All right, and some new guys in here too. So nice to see you. And Laura, of course. All right. Good morning. CMJ, you had a question yesterday that we can go over. You're looking at about the pay up, right? Okay, on the dome. Or it doesn't have to be on the dome, it's Execution Pro. Yeah. Well, maybe we'll get to it here in a minute or two. Let's kind of, roll with this order flow here for the moment and see what's going on. You want to figure out how to size it for the ES with something that makes sense. Yeah, it's really kind of it's chasing, and it'll put, because a lot of times you only get the traders that develop that were getting only partially filled or not even partially filled, right? And it was really upsetting to them, so they started to pay up for it and to chase. Okay, that's what it's about. Anyway, we'll take a look in a minute here. I just want to go through this whole process. So we had our data here. I'm using TraderMap Pro version here. For you guys that are using Bookmap data, there's something else I want to show you here. We went through candles yesterday, and we'll do it again, in fact. And I'm just going to zoom out here. Just zoom out with your center mouse wheel or down here on the horizontal scroll. Just left click, hold, and drag, and then you'll see this here. This gray square with a little white arrow in it. Click on it, and we're going to add more data in here. Click on the drop down here, and with Bookmap data we are offering up to, as you can see, I have 80 hours of cloud data. Okay, of 7 days of local data. Local data is different though, that's or 96 hours of local data. That means that I already have saved that data. Okay, so in this case I am downloading the 80 hours from the cloud here instead. Okay, so that'll be it's backfill data. It is not high quality data that Bookmap offers. It will be parsed somewhat. Okay, it's not as high. It's still excellent. It still has full depth and all of that. Okay, which is amazing. It really is. But we don't have the MBO data in it. It's just too heavy. Okay, so I think it's every second or so that you get data, right? So with the Bookmap data that you are looking at in the current market, it's not just second, it's millions of seconds. It's nanosecond resolution. It is everything. It is everything as pure as can be from the market, and that's one of the strengths in Bookmap. And you may think, oh, I don't trade at those levels, but when the order of operations and the way things come into the market will matter, right? And that's why you'll see the distinction in the order flow compared to other products out there, competitors out there. They can't do that and offer this level of accuracy. Okay. Anyway, so I'm downloading 80 hours here, and we're going to take a look. We're going to zoom out in Bookmap here. And get a feel for just last few days or so. Something like this is just fine, right? In fact, we can look at our higher time frame candlestick chart here from Rhythmic R Trader Pro. This is the daily over here on the left, and this is the breakout and the price exploration after the breakout here. Okay, but you can see, look how it's doing it now. Here, pretty strong big green candles, right? Starting to slow down a little bit. Starting to find some wicks up here. Wicks on both sides. Then wick on the top here from yesterday, and then today we're opening up within that price action, and we have not broken the high. Right? So maybe we're looking for kind of a pullback now. Not saying reversal, but maybe we're looking for a reversal on a smaller time frame. We're probably just looking for maybe a bit of a pullback right now. Okay, where might price go? Well, it's already done this move. You can see here it's come down to the bottom of yesterday's low here. Okay, so we've already had that test. And here's our hourly here. Yeah, let's take a look at it here. Now this is regular trading hours in here. Okay, if I check the box here, so this is only the cash 9:30 to 4 p.m. Hours here, trading hours. Okay, that's why you see the gap here from yesterday. All right, and we only have a couple hours here for today. It's 10:30 right now, East Coast time. All right, so yeah, you can see that we had this kind of retest back down. Well, here's the retest back down on the overnight, and 9 o'clock. Yeah, so just recently, and then you can see we moved right back up, and on the hourly we went above the previous hour, but we're back down again. Okay, let's look at the 15-minute chart on the right hand side. Okay, same thing. These are regular trading hours. You see the gap down here, and then we see the move back up, and filled the gap. Okay, and then some, and now we're seeing a bit of a pullback, right? We're seeing that the wicks up in here, big wick from yesterday, cleaned everybody out, and then back into the range in here. Okay, so and we see the wick up above here. It doesn't even test, there's not enough strength in the market to test some of these wicks up in here at 62.54 and 62.56. Okay, so this is giving us some good information here, and we see the red candle right now. Okay, so that's looking at Bookmap here, and again, we're just looking at candles right now. In fact, let me an interesting setting we have on our candles, if you guys haven't noticed it, or maybe it drives you nuts, is we can look at see, this is a 1 minute candle. but I just enabled the candlesticks here for aggregation to align with the width of the body, which I have as 20 pixels here. Okay, so I don't know what time frame this is right now, actually. I mean, we can figure it out. It doesn't take much to figure it out. Yeah, anyway, you can see that it's making candles fit now. So we can see the candles. But if you want to look at more precise candle data, then you'll have to kind of play around with it and look at instead of 1 minute, maybe you look at 15 minutes here, or maybe 30 minutes here. Okay, and there we go. So now we have 30 minutes of data per bar. Okay, this is the bar we were looking at yesterday, and you can see the we're looking for that test and below that little swing in here, and we're looking for that bounce, which happened later in the webinar. But after we were looking for it a few times, and it was after we here 11:30 was this candle here, so it just had kind of started to move back up and retest these areas. Then we see this move back down, and this big move back up, strong move through all this area up in here, and then the big wick again. Okay, and this is all overnight here. Okay. All right, so yeah, it looks like some weakness again in here. Looking at the bigger picture in here. Okay, bigger picture. So from yesterday's action, here's that test of the low down here. Didn't quite get there, but pretty close. And then above the wicks here, and then weakness. Okay, interesting. All right, so it looks like it's going to be pretty choppy in here. And let's see now if we zoom in a little bit more. Let's get a feel for the bigger, higher time frame here in the candlestick chart, and look at the liquidity in here. Well, you can see how you can use this on your higher time frames in here. See that liquidity up in here? Okay, see that swing up in here as well. That's how to use it. Okay, there's also one up here. We didn't come up there though. All right, so now we've got liquidity here. Where do we have more liquidity to give us a bit more insight? Okay, well, we also have some liquidity down here. Did it just get filled? Let's jump back to our smaller time frame here and take a quick look. Okay, yeah, it looks like we did. See how they filled that liquidity in here? Okay, point of control is right up here, right? So pretty choppy, but I would look for see if these buyers can retest back up to point of control, maybe the other side of the range here. Let's take a look at, we know the liquidity transacted. Now we want to look at the volume in here. Okay, so do we get enough buyers in here? Here they come right now. Okay, there's our retest right into point of control. Okay, I'm looking for a little bit higher here, maybe back up even to well, could come up to 48 liquidity here, but we're just looking at some of the ranges in here, some of the swings, and matching it with liquidity, and we just traded into one right now. Okay, so anyway, for those of you, it was great last week, and why I'm covering these candlesticks on higher time frames, okay, is there was a lot of confusion in YouTube. And understanding how to use and read Bookmap, this should really help. Okay, so looking at candles, these time periods in here, and then matching it with liquidity. Okay, we're not even looking at volume dots. We're just, volume is down here in the subchart. We're just looking at candles and liquidity. That's it. Okay, and we want to see liquidity at our levels of interest. All right, so crackhead, let's see, and I'm inspiring you. I don't know, with a name like that, it's I don't know if that's a good thing or a bad thing, but no, I appreciate it. Oh, please, this is not a trading room in here. Anything in here is for education only, just to cover this in here. All right, this is important. We will go through these concepts in here so that then you can go back and study them. This is just to cover some of these ideas in here and how to read order flow and look for the follow through. Okay, we want to see it in the live market. That's where we can put it more to the test. And then, but that's the starting point for you as a trader. Okay. And then as a trader, then you'll take it into your back testing and get really good at it. And then you'll have something that you can then forward test in demo, and then start to forward test on small size, and then you can scale up. All right. Anyway, no, I appreciate it. It's just we are in demo paper trading mode. It does say real trading down here, but I am in demo. In fact, I'm trading here with my Rhythmic account. And I'm going to show you that Rhythmic account here. I'm going to use this cross trading, and it's this one here for the multi account that I had set up. Here's the Rhythmic account number 60. That's my primary account, and then 60.1 and 60.2. So I have these all set up to trade multiple accounts at the same time for your, if you're using like a prop trading firm like Top Step, Apex, etc. Okay. Okay, so guys, look, again, high liquidity, 48. Okay, we're not making this stuff up, and then we see sellers come back in. Okay, and we were looking for, it was off of this chart here, I guess. Yeah. Let's see. We were looking for a test. I know we were looking for a test up into this liquidity here. We didn't know if it's going to make it further though. Okay, well, here's our answer. Okay, so we found some sellers. Okay, let's look at the volume in here. Let's look at this context in here. Okay, this is where it might be confusing for a lot of traders new to Bookmap. But maybe we should put some candlesticks on this one as well. But the context is this: there's high liquidity down here. Okay. It tests this and probes into the bottom of this event in here, which we are still, the price action is still within that event. Okay, tested that liquidity, found some buyers, bring it back up to high liquidity on the offer. Passive sellers are met with the aggressive buyers in here. Not enough aggressive buyers to trade higher. Aggressive sellers come in, trade it back down into I remember where we left off now. Yeah, trade it back down to point of control and through it back down to the bottom of this range, or getting near high liquidity down here around 62.40. Okay, we don't see it yet. There's some exhaustion in here. I don't see sellers in here. Right? Doesn't mean that we might rotate lower, or might go back up. We might rotate lower, find some sellers, and then get follow through. Right, this is where we left off. We started to see that liquidity trade. Some buyers come in. We're looking for kind of just back to the POC, and that liquidity in here. It did it, and then it went back up into 48 level of liquidity, where these sellers dropped it, and then you can see that they reloaded here. So see the aggressive sellers come in, and look, they're lined up again right where it dropped from. So this is supply. Okay, so just redefining some of these things as well. So these guys are kind of in control of the market right now. Okay, that's where the heavy supply came in from the aggressor side. Okay, this is where the heavy supply came in from the passive side. Okay, that is the resistance in here. Okay, it is supply. This limit sell orders. Just going through the terminology in here, it is really important to understand. Okay. All right. Let's see here. Any other seeing large orders at 62.50, likely spoofing? Yeah, I mean, our large lot tracker is picking up. See that little white line right there? Out of the 875 contracts up there, looks like probably around 800 is one individual player, something like that. So and he came in, you can see exactly when he came in too, So now, is that going to be a target though? Is it a spoof? Is it a skew in the order book? How did traders react to it after that? Okay. Well, let's see if we break this low in here. Okay. Now we just traded into high liquidity here as well. Okay. Now through it. All right. Well, let's zoom out a little bit here. Okay. So we're below now. We're below this all of this price action in here. Okay. Do we find buyers wanting to hightail it back into a mean reversion trade back to this 44 and a half here? Let's see. Okay, this would be one of our setups actually on a very small scale here. Okay, we're at a key level is, yeah, we're at a key level enough for this small time frame example. Now we're looking for aggressors to come in, and let's go for it here, right? We're looking for aggressive buyers after this passive liquidity transacts. Okay, so let's see if we get it. Okay, so we're looking for this accumulation in here by the buyers. This is going to be a stop run here as well, a flush through that liquidity and a key level on this time frame. Okay. All right, there they are. All right, now let's see the buyers move it here, and we're just looking for a move back up to the top of this range. Okay, that's it. That's all we're looking for right now on this time frame. Okay, you can see what's happened so far is it came to the top of this little zone in here, top of this range. Okay, let's see it. We'll see if these buyers are still in here or not. And we're not looking for much. Okay. We are looking for this transition from passive accumulation, and there's some of that there, and we have a stop run. Okay, and we have now aggressive accumulation in here. Question is, are they going to still continue to buy and accumulate here, or are we going to find some sellers come in and these guys have to exit and we get a stop run? Looks like we got another stop run. Okay, but again though, so far we're saved by more passive accumulation in here. Okay, on the bid here so far. Okay, still more aggressive sellers in here. There are aggressive buyers. All right, let's see if they can push it more than that. Not just back to the top of this little range or this range. We want more. And we're starting to see it. I mean, we're starting to see some things. We've seen some of that accumulation in here on that buy side. Question is it enough on the bid in here, accumulation? And that's kind of scant, to be honest. I'll show you the setup here from the Learning Center, and where we really look for it is like down several levels, at least 3 levels of high liquidity getting filled. Okay, so we have all of this buying in here accumulated, and that the sellers, they've dried up, and then once those aggressors come in, that's when we get traction with the setup. Okay, and right now it's pretty choppy, and there's still sellers in here, so they haven't all been it hasn't been accumulated or absorbed yet by those passive buyers yet. Okay, so sellers are still able to drop the market here. See, buyers are trying. They're trying. More aggressors starting to come in again, trying. So, you know, the battle is taking place, as you can see. This is why we look for, in the setup, it is way better to look for multiple levels of high liquidity getting filled, right? Then this move is easy. Or easier. And in fact, we can even look for another structural level here. Another setup in here. Okay, they're bidding up a little bit higher here as well at 38. Okay, now that hasn't transacted, right? But you know, that's positive for this setup at least, that they're bidding up at a higher level underneath. Okay, and we do see some buyers here. Yeah, we'll jump over, Dylan. We'll take a look at the NQ in just a minute. And CMJ, I haven't forgotten about you. Laura, all right, the cat is melting underneath your monitor, huh? All right, guys, looks like we're not going to get traction out of this one. We still may, but we'll see this reaction to this liquidity here at 38. But you can see this isn't really an A+ setup in here. It's not a 9 or a 10. It's more like maybe a 7 in here. And it's trying. You can see buyers are trying to get above some of these levels in here. And it's just, they're still selling pressure. Hasn't been absorbed altogether. Okay, so in fact, looks like there's enough selling now to hit into probably down to 35 here. Yeah, so we're stopped out, but let's see if we get a flush through into 35 in here. This would be good because like we would have our probably about 3 levels, maybe 4 levels of liquidity in here. Okay, again, it's not the greatest setup in here. Let me show you what a much better setup looks like. If we go to that learning center and that supply and demand course, trend line break and accumulation here. This is it here. Okay, all of this in here, high liquidity, high liquidity, high liquidity, high liquidity, high liquidity, 21,000. Okay, in the NASDAQ here at that level, and one more push through into this liquidity down here. Then we have our trend line break. Okay, and then we start to get that accumulation by the buy side in here. Okay, and that's when we're looking for the move. Okay, so we have that key level and we have an incredible amount of passive accumulation, and then those aggressors, it doesn't take much for them to lift the market. Okay, that we don't quite have yet in here. And we noted like our key level here was these levels in here, which really aren't the best, right? Now we're getting into some much better ones because we're on the higher time frame, right? So now we're down at this 35 level, a little bit below it here. Let's zoom in here. I think we'll probably get it by now. There's our flush through into high liquidity as well. Okay, so if we get our buyers now, we'll do this. I'm going to go for it here. Okay, we haven't quite broken the structure yet, but this is looking pretty good now. Okay, even more, and we can even look for this is a little more advanced of looking for a pullback now to where we just kind of broke out from in this area here. Maybe even put it right where that high liquidity traded at 35 for a pullback. Okay, look at other players in here for understanding where they're going to provide liquidity as well. Maybe follow along with them. All right, so again, let's see if we can get this move now. It looks much better. We have more at our back now, right? All that passive accumulation in here. Okay, now we just need to see if the buyers step it up, and lack of sellers in here. And we can look, this would be a beautiful mean reversion trade back to point and control, for example. Okay, back up to 44 here. Okay. In fact, I'm going to move my take profit up to that, just in front of that liquidity by a tick. And let's see what we get. Gene, welcome. You're new to Bookmap? Kind of new to Bookmap? You think you've been using it wrong? Okay, well, Gene, I would suggest here, let me show you from the Learning Center. Okay, go back to the Learning Center from the education link on the home page, and go through this market mechanics course. Okay, this is really great. You know, we've had it for a while, but I constantly show this again and again. But really, it's really important. In diagram form in here, we have you know, what's going on when a market buy hits the or lifts the offer in here, and takes liquidity off of the best offer. What happens? What's the dynamic in here between the buyers and sellers? Understand this can be really, really helpful. All right. Okay, so we got a bit of a pullback here already, and just not enough buyers. In fact, I'm kind of surprised that the buyers weren't even able to get back up to this swing here. I would be looking for that. So we do have some weakness in here. Okay, we're not getting a whole bunch of buyers. They were able to take it where these sellers dropped it, but they were not able to test the swing here. Okay, so now due to that, do I want to put more risk on because of that swing here? Maybe not. You know, maybe I'll consider like you know, canceling that order, and maybe I'll add more if I see a lot of aggressive buyers come in, right? Because I'm not seeing the buyers in here. That's the second part of the setup, okay, that we need. We need to have those aggressors come in. That's what moves the market. Okay, but it's this dynamic between the passive and aggressive. Okay, and Gene, that'll help answer your question there, I think, with the Learning Center, and this. Just go through part 1 of the course. You might want to go through all of them, but just start with part 1 and absorb that information. Would be really great. Okay, and then come to these webinars, ask questions. You know, you might want to join the Bookmap Academy, because you'll create some content, and then people will get back to you with feedback. Coaches will get back to you, and they'll say like, hey, you know, no, consider this with the liquidity, or consider that with liquidity. You know, and that can be very, very helpful for you. Yeah, using the heat map is dynamic, right? The markets are dynamic, as we know from that Axia Futures webinar with Bogdan, the author of Stoichescu, author of Traders of Our Time. He was saying that, you know, the markets they're not complicated, they're complex, meaning that there is so much going on in here. right? Everything can change and shift and morph. It's like a storm weather pattern, or it's like an environment in the rainforest ecosystem. Okay, see, like right now, see, we see more sellers back down here. So look at our weakness again. We have two instances here of aggressor exhaustion. This isn't looking good for our setup. Okay, we'll see. Maybe buyers finally come in and trade up here, and maybe get all of these sellers upside down. And we don't know yet. We're starting to see buyers come back in, but let's see if they have the power to get back up here. And they even made a lower high here. Okay, so this is not looking good for this setup, but we are in at a place here at the bottom of this range. So our entry is not bad, and we can just exit the trade for a very small loss, or maybe just a tick gain or something. Okay. And on the one over here, we were in too early. Didn't see enough passive liquidity. Now we have passive liquidity filled and a flush through, and this is going to be a stop run in here. Okay, but we're still not seeing the aggressive buyer interest in here. In fact, there's a lot more on the bid, or I'm sorry, a lot more liquidity on the offer up here. Question is, do the buyers want it? Okay, are they going for it? I'm not seeing that interest. I'm not seeing that appetite by the aggressors. Okay, I know this sounds complex, right? Let's just try to simplify it, though. We again look at candlesticks in here, and put the pieces together. Right? We can add candlesticks on this chart too. All right, so here's 1 minute candlesticks. So this is our range in here of candles. Okay, and we see wicks here. Okay, do we see buying pressure now? Okay, yeah, I'm starting to see some, right? They're starting to come in. Okay, all right. So now, due to that, I'm looking for buyers to retest back up to the top of the range here. Okay, so here's an engulfing pattern right here on a 1 minute, right? All right, we're starting to find some buyers. Okay, now can the buyers break the range here, test up to the top of the range here, 39.25. Now look what there's liquidity. Okay, so this is the range on the candle, 1 minute candles here, but there's liquidity here. Okay, now the question is, are they going to stay in the order book up here? Let's see. Are they going to transact? If they pull, it's easier for these buyers to trade through and go up higher. Okay, so here we go. Now it just traded into that liquidity in the high of the range. Okay, so we're probably going to get a pullback now. Look at now let's look at the volume here behind the candles, or within the candles here. This would be more like your footprint chart. Okay, so you can see that there's volume dots in here. You can see volume bars down here. Okay, this is good, right? Now at this point here, I'm going to move my stop up to break even, maybe a little bit below break even, just because like I am looking for a pullback right now, and I would look for maybe a retest back down into this range in here. It might even come back down right to the bottom of the range here and stop us out. Okay, so I'll consider my stop management when we see the price action in here. Okay. Yep, there they come. They're coming in now. You're spot on. Trading is life. Yep. Okay, how much buying pressure do they have? Okay, compared to this, all of this selling supply up here. Okay, so back and forth right now. Here, let's dim the heat map a little bit here. So now look at that, it retested back up here. right? And we didn't have those. We had some buyers up here, and then here's actually the retest right here, and there's no buying. Okay, so we just came down to this little swing here in the range, and these 1 minute candles, and then we're right back up again in the middle of this range now. Okay, but that's some selling pressure coming in now, right? So how do we want to manage this? Are we looking for just taking some off up here, getting out at the top of the range and call it a day, or call it a trade, or are we going to wait for maybe the fourth attempt up here, and let's see if we get a ton of buying in here to be able to lift it back up into where we're looking for at our point of control? Okay, so at this point here, I am going to manage my stop. Okay, I'll put it at break even. Okay, and almost got stopped out there. Right to the best offer. Okay, so there we are. Okay, so we're stopped out at break even on that. We gave it a shot, right? And now we're seeing a lot of sellers come back in. In fact, we can look for maybe a small pullback in here, and then sellers to hit back down into maybe the swing lows here. Okay, this is not a setup though. Gene, did I answer some of your questions there? I hope. Let me see over on YouTube how we're doing. Dylan. Good morning. NQ, sorry. Yep. Let's jump over. Okay. Okay. Let's zoom out really quickly because we're just trading into some pretty high liquidity down here in the NQ. Right. So we can look for this same setup here because we've traded into a lot of high liquidity down here in the NQ. Okay, along the way here. Okay, this area for sure. This area is kind of dubious in here, but then this area here for sure. Okay, now the question is, do we find buyers? Not yet, right? Not yet. Just touching the structure up here and then coming back in. Okay, 22,700 right here, and we're below it. Okay, but that's a lot of liquidity filled in here. Buyers were able to get back up to here where it dropped from. That's it. Okay, so I'm going to hold off on it. I mean, I don't see any high liquidity until it's down here at 50 points lower. It's so tempting. I mean, now it's breaking the structure and it's breaking it on volume. Okay. So this is probably the mean reversion trade we're looking for. How's the ES doing? Yeah, the ES as well. It kind of shook us around a little bit. It's dynamic. Look, we don't know, and we're looking for something kind of clean and something clear, clean and clear. This would be a more aggressive entry if we got in on this one here. Because all of this in here, we want to see that clean reaction to it. And you know, it's funny, like that I think a little differently after I really like what Bogdan had said from that Axia Futures webinar about the complexity of the market. Because this is a different version, this is a more complex version of what we're looking for. Okay, it's not exactly what we're looking for. So anyway, and it seems to be working out. Okay, well, let's see if we get maybe a flag pattern out of it. Strong move, impulse move, and another one. All right, we'll just try to ride that momentum up to point of control. Can we do that? Again, not trade recommendation here. High liquidity up here, that 141 and then a 107 here. Okay, this is more of a continuation pattern in here. Okay, which it's not that great either, but I am still looking for these aggressors in here. Trade back up here. Anyway, yeah, I really like the way he kind of framed the market and kind of reframed it for me, thinking of it like we know it's complex, and I always kind of thought it as complicated, and he made that distinction. It is complex, and I really like that because this is kind of what we're looking for. It's just a totally different variation, right? It's not as clean and clear. This one over here from that learning center is clean and clear. This is what we're looking for, right? We're looking for that accumulation and then those aggressors to come in. Okay, flush through high time frame level, important level, and then the flush through here, and then the accumulation in here. So passive accumulation, important level, aggressive accumulation. Okay. All right, so now on this one, you can see how this kind of worked out. So we got filled on this one, and we kind of got in on the continuation pattern here, and stopped out at a pretty unfortunate area here. But again, I would have done the same thing in here, no doubt, no doubt. This was not looking strong to me. We had this at our back in here, but we didn't have the aggressors now. Right, so it's a two-part process in this setup in here. Okay, let me get rid of all the drawings. Part one is the accumulation here on the offer at a key level and multiple levels, and then part two is those aggressors. And here the aggressors, we saw it earlier. The aggressors just weren't doing it. They just weren't doing the job. They should have come up here. And they should have come up here at this point, right in here. And they didn't. It hacked around. And more sellers, a lower high, more sellers. No, this is not looking good. And then we get one more retest, and we do see some aggressors come in here. And it's like, okay, I'm going to move my stop up now because this should work at this point. Right here especially. This should work. It should go up. And we should be getting filled up in here. We got one more hit down. We got multiple hits down here. One and then another, and then the aggressors start moving it here. And now look at the volume in here. Okay, we can see that distinction in that volume cluster coming in. This is the strong move. This is what we're looking for. But we were looking for it over here, or here especially. I really thought we had it here. Okay? In fact, we were looking for it too early. Over here, but we can see the volume cluster in here, and we did have the trend line break. Okay. hope this makes sense, guys. In fact, I'm hoping that it helps with the risk management in here, that we're looking for something specific, and we're taking it then. Okay, and if it's not that specific, we will we'll manage our trades on it, and then wait for something better. Okay, now it did this mean reversion trade, and look at the sellers come in hand over fist now. Okay, now this is another impulse move here. Okay, so in fact, we can look for this to just follow through, I think, to the downside. Yeah, there we go. Let's see if we can get, maybe we're already filled. Okay, so I just on a small pullback there, and then let's see if we can get this continuation move. Now we're going to look at our higher time frames in here. Okay, so we're looking for a move back down into this 31 here, but this is pretty good momentum in here. So maybe we can get down into 27 or even 24 here. Some of the swings down here on the 15-minute chart. Okay. All right, so let's align our take profit. We said 27 or 24, right? Well, let's put it down in front of this high liquidity at 25. Okay, guys, this is not really a setup either. It's not. We can make it into one, but because we've seen this so many times, I've just never documented it as a setup. But still looking for follow through here to the downside. Time of day aligns very nicely with this one as well. All right, let me see if there's any questions. GAN is needed to configure pivot points. DB. Yeah, I used to. I remember playing around with a GAN fan and all that kind of stuff, or GAN levels. Yeah, I don't know. I just really I come back time and again to understanding order flow and levels, really, volume and transactions and around key levels, and that's really it. Okay, and what I mean by volume is both passive and aggressive. That's the benefit of the heat map in Bookmap. Let's see some more questions over here though. Stacking, pulling columns. We have that, Dylan. We can look at a liquidity tracker as an indicator in the subchart, and or we can look at also in the columns in here, for example, the quotes delta. So this is your pulling right here, adding and pulling. Okay, I mean we've got just about everything. Trades counter, quotes delta, time and sales, etc. Okay, so anyway, play around with it, and you can look at another one that you might really like here. I like very much, and so do a lot of other traders, is looking at the volume columns in here, the chart range volume column here, but then with delta. Okay, so this would be your buyers and sellers in here on the horizontal, but where are the sellers, where are the buyers? So you can see there's a big cluster of selling down in here. And now look at this in here. In fact, this is where you can look for a trapped volume, and there might be a nice trap just presenting right now if buyers get back up above this little level right here around 32. Okay, because all of that selling in here is going to be trapped. Okay, it could be the opposite though. We could see this little cluster of buying in here, and that's over here actually. Let's see if they run for the hills here and have to sell. How does anyone actually read it though? You mean the GAN fan? Yeah, I have a hard time looking at those GAN levels. Something's going to match up. I think I don't know if Dylan, you're talking about this. I think this is a very simple read. Just, you know, if there's buyers back up above it and you see some size come in, get out. Now this is these sellers in here are going to be buyers up in here, and they're going to move that market. Interesting one, BQ. Today's mean reversion trade, it struggled. It did it, but it really struggled. And you could see that there was just more selling pressure. You know, we kept on looking for those buyers in that mean reversion trade, and it struggled. It finally did it, but you look at the reaction right after that. You know, they're coming in hand over fist, right? And this level here doesn't matter anymore. They just bleed right through it. In fact, you get what you get is the retest. This happens a lot. The retest back up to this level here, and that's right here. And you can see it in the candles as well. Now here's your retest back to it. Okay, starting to not find sellers down here, but we're going to stick with it here and go for our 25 liquidity down here. We can trail our stop down at this point, just above the swing here. It is at break even plus, but it's not about that. It's really the swing here. We can put it down at this swing if you want. Okay, yeah, thank you, Aloise. Excellent covering that. You're just looking at that free version there. Kin 1972. Yep. All right, let's jump back over to Discord. Sorry, guys. It looks like we're all caught up. Okay, now again, you can start to see. Now let's jump back and look at our higher time frames, but we're starting to see some of this liquidity, and the market's starting to struggle a little bit, right down in these levels here, and starting to break you know, some structure, and again, it doesn't have to be diagonal structures. You know, we can look at horizontal structures in here. It's the same thing. This area here, this area here, this area here, this area here, and then there's high liquidity there at 28. Okay, is there more selling pressure? That's what we want to see. And they're starting to come in again. Now let's see if they move it here. Nope. Another rotation. Let's jump back and look at our higher time frame here. So we're down at these levels in here. Might be a good idea to take some profit instead of hold out and be stubborn for this 25 level down here. It's just weak though, and we see this momentum here. This was the retest up to that mean reversion, and then there you go. There's your VWAP as well, trading's life. Okay, so it's weak, but we're down at where buyers came in, so it's something to consider, right? Instead of being stubborn here. Yeah, there's some exhaustion here, in fact. some selling, and then and we're starting to see the aggressors come back in. Yeah, let's we'll wait. This liquidity just traded, went above this level here, and then we'll see if we come back in the range here. And this pullback will give us the answer we're looking for. And it doesn't, no, it's not clear yet. Still more buyers still. Okay, high liquidity, it transacts. Okay, looking for a pullback though. London close coming up. And this is pulling all the way back. Really. All right, so we're actually knocked out of that one. All right, so yeah, pretty stubborn on that. That's something to look again at. You know, this was a nice move. It was a nice gain from 36 on down to you know, this liquidity here at 28 or so. So that's, you know, like a nice little 8-point move. And then we can look at this clearly in hindsight. We mentioned it, we saw it, and mentioned we shouldn't be stubborn and take our profits here. I just was looking for the higher level here because of the weakness that we saw in here. But there's good reason to take some profit down here, okay? And we didn't, we paid the price for that, which is it's unfortunate. But looking at it again, like, just, you know, in hindsight, it's very easy. Of course, we saw it starting to unfold like this here, and thought, nah, come on, you know, maybe there's high liquidity up in here. It's going to hit it. There's still more selling. The markets are weak. It likely trade back down to the low, and it didn't. Okay, again, like, reflecting off of this, we just don't know. But just being stubborn about it, and not being too rational about it, was not too smart, you know. You know, we got knocked out. Might as well just take some out of the market here, is better. Instead of like getting another, like, you know, 3 points out of it or so, down into that high liquidity down in here, which it still may come down to that level. Okay, anyway, this is I think what in this webinar, the point, a really important point, and in covering what I think Bogdan had kind of enlightened us with about the complexity of the market, is it's not a math problem. It's not like you know, some like pieces that fit together perfectly, and is you know, you're gonna figure out the market. I just don't think it works like that, right? It is highly complex, The butterfly starts flapping its wings like let's just take a look here. That butterfly effect, you guys have probably been used to that analogy for decades. But where does that start to happen? Well, you see little pockets in here. Here we have, this is not good, is we have high liquidity filled in some of these areas here, but certainly here and here. And we have high, that selling starts to kind of dwindle on the way down. Then we have our exhaustion kind of in this area here, and there is some more liquidity there too. And then we see this transition start to take place in here. Now we also see it in here, right? This is, to me, this is that kind of butterfly flapping its wings in here. And then we see this start to happen here. However, they're going to run right into high liquidity again. I thought this would absorb it, and the markets are weak. We'll see it roll over and continue on down. It didn't happen this time. So in the end, how do you want to handle it? How do you want to manage it? I think just being kind of as we say in here, just hit singles to begin with. Maybe a double. In this case, it would have been maybe like a double or so. And then we're looking for just getting out and learning from it, and then getting back in. Now that will keep you inspired and keep you in the game, right? And now if this goes down and went down another, and it could have, and if it went down not only down to 25 here or 24 here, it could have dropped all the way down to 6,200 down here, right? It's possible. And it didn't. But it makes sense there's probably going to be some buyers in here. Okay. This is something to reflect off of, and then look at again. And then how do you want to handle that? How do you want to manage your trade off of that? Okay. So in this case here, we had the readings for these aggressors to start to come in. We also had some high liquidity here. I thought this would absorb it because we know the markets are weak. It traded through this area here, and it didn't. And this is actually another nice little setup in here. This setup in here, let me show you which one it is. Okay, it's actually something we should have noticed. It is here from that supply and demand educational course here. Okay, so from the Learning Center, supply and demand setups, and then this one here, absorption followed by exhaustion. Okay, now the one thing that there's a big distinction here though with the absorption and exhaustion in this one, is that this is going with the trend. Here's your absorption into high liquidity. Here's your exhaustion right here. Okay, this one here is not. Okay, this isn't more of a reversal, and typically with reversals you'll see it come back up into the high liquidity and roll back over again. Okay, absorption and exhaustion work better with the trend. All right, let's look for it now. Actually, let's go back to current market and let's see what we got. Okay, well, we retraced all the way back up here to previous point of control, and then point of control just bumped up again here. Okay, and now we're finding even more buyers here. There is no exhaustion up here. Okay, we're finding buyers. Okay, next level might be up here at 48.5, maybe 50. All right, let's see if there's any questions. The Axia webinar will be released in the next day or two, Dylan. Look for it. We'll let you know. Yeah, I mean, it really helped reframe things for me. That it's it comes down to the management, I think. I mean, you have to look for your niche, your setup, your there was a great discussion about it, and you're looking for something very, very specific within this kind of big, large, complex ecosystem. And that little niche is where you have an edge. And that's what we're looking for. And then take advantage of that edge. You know, don't beat yourself up, but definitely don't let it go by. Reduce your risk, as we did. You know, we weren't stubborn enough to let this go against us. That's good. And we would have been. This is where I was wrong. Up here, right up here. If it goes above that, I'm wrong. Okay, and that's where we got stopped out. And you can even see it went above it. It traded into high liquidity. It came back, retested here, and then it bounced off of this zone in here. Okay, there's your volume profile in here. It's bouncing off of this in here and still accepting higher. And it trades into and through this high liquidity as well. Okay, so now we're seeing some pretty strong buying. We came low enough here to find strong buyers in here. Okay, this is obviously in hindsight, but that's okay. For me at least, I find it okay to go back and look at this and, okay, what did I learn? How can I adjust? What am I going to do differently next time? Okay, maybe nothing. Maybe you wouldn't do anything differently, and that's okay too. But just know why. Okay. I think for me, I would go back and look at this and go, yeah, you know, there's some nice things in here on these lower time frames. It's telling me something. It's also telling me something on this higher time frame here too, right? That we're below this swing and we're testing this swing here, and then we're starting to find some buying interest, right? Yeah, I really, after yesterday though, I thought we were going with the trend. That we saw the swing above, we saw the move back in, we saw the filled gap in here, and we saw the weakness come in here, and it struggled to do the trade we were looking for earlier. So once we started to see this volume come in here, I thought we had it to come back down into these lower levels, maybe even 60-20 down here, that liquidity, and it didn't, right? So anyway, take some off. And the setup there, we don't know, right? Maybe it exhausts out here, rolls back over, sellers come in, and then we got out here and we see it come back down here. And that will happen. It'll happen, but we don't know. That's the complexity here of the market. But we saw something, we took advantage of it, we got something out of it, and we held for a runner that didn't work. That's that. Confused about edge. Okay, edge is something, a GTX. I'm learning a free public group. Isn't edge really just discipline? No, it's not. Discipline and discern. Absolutely not. Edge is something that you studied. And you know you have an advantage. It's probabilities. Okay, so for example, if you come back in and you studied this absorption, exhaustion, and aggressors coming in, right? Now this is like I said, this is not with the trend. This is counter trend for the day at least. So that's why I thought we'd likely hit this, just trade to here, and then that would be it. We'd get our move back down again. But no, we didn't, and we see the distinction in here. And the edge though would be to look for that this pattern to repeat again and again. And it's not always going to work, but you would still look for it, and you know that you have an edge from studying that pattern. Okay, there's going to be slight variations of it. That's why the market is more complex. Let's go through a very simple binary example of an edge. Okay, that would be rolling dice. Okay, when you roll the dice, the number that is most likely to come up is a 7. There's more combination of 2 dice once they're rolled that they'll come up as a 7. That's just fact, right? That's very, very simple and straightforward. Okay, then 6 and then 8 are the next two, and they're equal. 6 and 8 are equal. Right now, where this gets more complex, now that's really straightforward. Okay, rolling dice like that, but we don't know. You might get 1s or double 6s again and again, multiple times. Okay, and you might lose all your money on that, and it is the least likely one to come up. Okay? That's where it comes into your risk management for your edge. Okay? So it's up for you to determine and study that edge. Now, the market is a little more complex than that, and it might be a better analogy would be more like poker. Okay? And it's still that is a lot less complex than the market. There's so many things pushing and pulling on the market. Different time frames, different traders, different backgrounds, different parts of the world, hedging, options, trading. I mean, there's all sorts of things going on. Geopolitical concerns, data, many different factors, large players, small players, etc. But in poker, let's go with Texas Hold'em. Okay, very, very simple example, but more complex than the dice. You get 2 draw cards, right? Let's suppose you have pocket aces. Good hand, right? But let's suppose you bet and someone calls you, and then let's suppose a 2, 3, 4 comes out on the flop, and a few people start betting pretty hard. A 2, 3, 4 comes out with all diamonds, let's say. Okay, how do you feel about those pocket aces now with someone betting hard, betting big? Your edge just totally was changed. Okay, they may be looking for a flush, they may be looking for a straight, and they may have it. They may already have it. And they may have like an ace high straight or something like that, or ace high flush, okay, or a king, and now it's a totally different game. So how do you manage that at that point? Anyway, I think you guys get the drift. Let's see here. CMJ, I did not go over this thing for you, but I will. In fact, maybe I'll just reach out to you directly, and we can go over it. Yeah. We took a look at NASDAQ, and let me see if there's anything else in here. Oh, well, the measured moves, DNT, I just duplicate the triangle. I do it manually for the measured move, right? So like this range here, I just do another one, and then I kind of equal it, and then I just edit. I got hotkeys here, and then I can look for my, this would be my measured move to the downside. Okay. All right. And let me see here. No, I'm not dragging and dropping like that. I'm just using the hotkeys. Let me just show you quickly, because then I got to go. Tom B is up, and I don't want to eat into his time here. But I want to support you guys. All right, so we'll just go over to, it is under, it should be under settings, keyboard shortcuts right here, settings, keyboard shortcuts, and then in here, and then I'll show you my drawing tools. Okay, so common instruments here. You can input this. Very simple to do, guys, to input your hotkey. No problem. You can do it in a second, and you can have it built out really quickly. And then we'll look at your trading hotkeys as well. I know, Rob, you're the expert on that one. And then our toolbar here. Open up that one. Here are our drawing tools here. And then you can see I just put in one letter. Clear the drawings, I use C. Edit the drawings, I use E. And if you want to edit this, just double click in here or right click on it. You can remove it. You can add a new shortcut, whatever. Okay. Yeah, it's really easy. And you know, take a look at it and you know, see what you get. Yeah, you can see that measure move starting to work out pretty nicely as another kind of head and shoulders up in here, right? Anyway, guys, we got to go. Thanks for coming, everybody. This is it. We don't have a Bookmap Academy meeting on Thursday. We'll have the onboarding meeting tomorrow morning or webinar, but that's it. So guys, you know, enjoy your holiday. Have a great 4th of July holiday, and we'll see you. I think I'm even away on Monday. I don't think I'll be back Monday morning, so it'll have to be. I'll probably have to see you in a week on next Tuesday. All right. So anyway, but we'll go through. I'll see you in the chat rooms over here. Okay. All right. Thanks, guys. Thanks so much. Hope this is making sense. Trying to keep it simple, but also keep the more advanced traders in line here. So just for the more the newer traders to Bookmap, start off with your candlestick chart and then look at how it relates in the swings to high liquidity. That's a really great start. Okay, then the next thing to do would be go to that learning center and then watch this course on market mechanics, and then maybe the supply and demand setups. Maybe something in there resonates with you as well. Okay. Yeah, we'll keep it at that. Please hit the like button. We'll see you tomorrow for the onboarding. Then that's it, and it'll be another week though. All right. Thanks for coming, everybody, and have a great holiday weekend. Okay. Yeah. Take care. Bye bye.